We never know what the future holds. Remember what I said. You can't do anything which is sure to be right or anything close to certainty.
Have you ever followed Howard Marks' financial advice? If not, try it today, as we are here with the financial wisdom of Howard Marks, the maestro of investing. In a world brimming with opportunities, Marks unveils a once-in-a-lifetime chance to supercharge your wealth. Join us as we dive into these unparalleled insights, revealing the keys to making money that could reshape your financial destiny. In a recent interview with Howard Marks, co-founder and co-chairman of Oaktree Capital Management, a net worth billionaire, significant insights were shared regarding a perceived sea change in economics. This video aims to dissect the implications of this change, explore its historical context, and provide a comprehensive guide to adapting your investment strategies for the evolving economic landscape. Let us understand the sea change in economics. Marx refers to a sea change in economics, signaling a departure from the status quo in the financial world. The past 4 decades have been characterized by consistently decreasing interest rates, resulting in a conducive environment for borrowers and asset owners. However, Marx suggests that we are no longer in an easy money environment, and investors must adapt to this shift. The Federal Reserve had kept the Fed funds rate at zero for an extended period to combat the global financial crisis. This low interest rate environment contributed to the longest bull market and economic recovery in history. However, this era of easy money is coming to an end, and the question arises, what should investors have in their portfolios going forward? Do you know what the rise of the stock market means? The stock market's substantial growth over the years have been closely tied to decreasing interest rates. As interest rates declined, the returns on fixed income securities diminished, prompting investors to turn to the stock market. However, with interest rates no longer at rock bottom, the dynamics of the market are set to change. The day of easy access to funds may be over. What are investment strategies for the changing landscape? Given the potential shift in economic conditions, investors need to reconsider their portfolio strategies. Whether you are a passive or active investor, understanding the implications of changing interest rates is crucial. Let us look into Howard Marks' insight into good investing. Lesson 1 is not about what you buy, it's what you pay. Marks reflects on his experience of starting a convertible bond fund in 1978, a move that changed his life. He emphasizes a fundamental principle: it's not what you buy, it's what you pay. Marks highlights the significance of buying things well rather than focusing solely on buying good things. His journey from losing money in top American companies to making profits in bonds of seemingly weaker companies shaped his belief that the key to successful investment lies in understanding the value proposition and avoiding overpaying for assets. Lesson 2 is about emotions in investing. Marks delves into the emotional aspect of investing, noting that successful investors keep their emotions in check. He discusses how most investors tend to follow the herd mentality, becoming increasingly optimistic as markets rise and pessimistic as they fall. Marks argues that superior investing requires going against the emotional tide, scaling out when prices rise unreasonably, and getting in when they fall. Lesson 3 is about expanding expertise and facing setbacks. Marks shares personal anecdotes about his career, including a setback during his time at Citibank in the 1970s. His decision to transition from choosing between top stocks to starting a convertible bond fund proved pivotal. Lesson 4 is about lifelong partnerships. Marks emphasizes the importance of shared values and complementary skills in building successful partnerships. Drawing from his partnership with Bruce Koch, Marks highlights their different thinking styles. Marks is a fast thinker and Koch is a slow thinker. The synergy between their skills has been a key factor in their successful partnership. Marks stresses the significance of mutual respect for each other's strengths and approaches in fostering a harmonious and successful business relationship. Howard Marks' insights into good investing, overcoming setbacks, and building lifelong partnership provide valuable lessons for investors at all levels. By understanding the principles of prudent investing, managing emotions, expanding expertise, and cultivating strong partnerships, individuals can navigate the complexities of the financial world with greater confidence and success. It was the establishment of Oaktree Capital Management in 1995 that marked a pivotal chapter, defining the trajectory of his legendary status. Recently, Marks shared a memo titled "Taking the Temperature Monday," delving into 5 strategic calls made between 2000 and 2020 that not only amazed billions but also imparted invaluable lessons to the financial community. In the twilight of the 20th century, As the dot-com bubble expanded exponentially, Marx found himself drawing parallels with historical speculative bubbles. A crucial moment came when he read Edward Chancellor's book, Devil Take the Hindmost, in 1999, resonating with the pattern of speculative mania. Swift to act, Marx penned the memo Bubble.com in January 2000, forewarning clients of the overvaluation of the internet-linked equities and the emergence of speculative mania. The subsequent collapse saw the S&P 500 plummet by 46% and the Nasdaq Composite experienced an 80% decline, validating Marx's sagacity. In his July 2007 memo titled It's All Good, Marx sarcastically conveyed the prevalent optimism, signaling an impending recession. As the global financial crisis unfolded, Marx's cautious stance shielded investors from a 53% decline in the S&P 500, epitomizing the foresight that defines his career. Amidst the wreckage of the subprime mortgage crisis and the onset of the GFC, Marx embraced the contrarian instincts. In a memo during the peak of market pessimism in 2008, outlined Oaktree's strategy to amass an $11 billion reserve fund and invest in distressed debt. His approach, grounded in the belief that companies would endure and regain value, proved lucrative as Oaktree reaped billions from buying distressed assets. Since the GFC lows, the S&P 500 has surged approximately 500%, underscoring the success of Marx's strategic move. As remnants of the GFC lingered in investor psychology, Marx defined prevailing bearish sentiments reminiscent of a 1979 article titled The Death of Equities, recognizing patterns in investor psychology and excessively negative sentiment. As the COVID-19 pandemic gripped the world in uncertainty, Marx, ever the contrarian, perceived an opportunity amid the market turmoil. Recognizing forced selling and extreme pessimism, he articulated in a memo that such sentiment fueled the emotional selling, providing access to great bargains. The subsequent 90% surge in the S&P 500 since the COVID-19 lows validated Marx's contrarian stance and his ability to identify opportunities during crisis. Marx imparts crucial lessons. Firstly, investors must be diligent students of history, engaging in pattern recognition to gauge the market's temperature accurately. Secondly, understanding that business cycles stem from excesses and corrections driven by investor psychology rather than mechanical processes is paramount. Lastly, during times of market extremes, the ability to control emotions, resist peer pressure, and embrace contrarianism proves indispensable. In the intricate game of investing, Howard Marks' journey stands as a testament to the enduring value of astute observations and unwavering convictions. His timeless wisdom resonates as a guiding light for a new generation navigating the unpredictable tides of financial markets, emphasizing the importance of patience, contrarian thinking, and resilience in the face of uncertainty. If you enjoyed this video, be sure to give it a thumbs up, share it with your friends, and subscribe to stay updated. Thank you for joining us, and we'll see you in the next video.